Good afternoon, everyone, and welcome to the first Ginnie Mae New Issuer Roundtable. We appreciate everybody taking their time out of their busy schedule to attend our first ever video webcast. The reason we had this session came out of our Education Summit last year, where we ran into a large number of issuers who have gone through the Ginnie Mae approval process. And actually, we've had over 140 issuers go through the Ginnie Mae issuer approval process, which can take some time, but we only have 40% who've actually delivered pools. So the big question for us is, what was the obstacle preventing these people from getting into the game? So that was the reason to hold this seminar, is to bring in some industry experts to try and fill in the gaps for you on how you can get into the game. And we feel like we've gotten some excellent people, best in the class organizations that can help us inform you on the next steps you need to take to successfully become a Ginnie Mae issuer. So I'd like to have the panelists introduce themselves real quickly, and then we'll break it down into 4 segments here. And after each of the 4 segments, we would love to get audience participation. That's a key part of this whole thing. We want to learn from you where the gaps are and try and help fill those in. So feel free to submit your own questions, and we'll try and have the panel address them during this roundtable. So you can email your questions to Anna, it's A-N-A .c as in carrot .rocha, R-O-C-H-A @hud.gov. So send in your questions if there's anything that you want to know about how you can start becoming a successful Ginnie Mae issuer that you feel we could address here. Would love to get answers to you. So I'd like to have the panelists introduce themselves here. Jason, why don't you get started?
Good afternoon. I'm Jason Eisendrath. I'm with Mortgage Delivery Specialists. We are a division of Mortgage Industry Advisory Corporation, and Mortgage Delivery Specialists assist lenders with delivering loans to the GSEs and Ginnie Mae.
Matthew?
Hi, I'm Matthew Hinkle. I'm with Planet Home Lending. We are a full mortgage lender, and we do retail servicing, correspondent, all the various aspects of a full-scale mortgage lender.
I am Gary Ort, and I am the president of the Mortgage Finance Division of Texas Capital Bank. We do warehouse lending, we correspondent lending, MSR financing, and the treasury services for those servicers.
Good afternoon. My name is Julio Aldecose. I'm actually the managing director for Lakeview Loan Servicing. We are actually one of the Ginnie Mae issuers. Our portfolio is just over $57 billion, and one of the areas that I focus on is servicer oversight.
Okay, great. Now that I've introduced you all, I forgot to introduce myself. This is Roy Hormuth. I'm the single family director at Ginnie Mae, and I run all issuer engagement and portfolio management for the single family side at Ginnie Mae. So why don't we get started on the whole core question here. The first question I want to ask the panel is just, what are some of the barriers you think in getting started with issuing Ginnie Mae securities? What are some of the things people need to understand to kind of get off the sidelines and deliver their first pools?
I can certainly start out with that one. So one of the barriers that we see commonly is just as simple as the relationships that need to be set up when getting set up with Ginnie Mae. So those, most of you know that you of course need your issuer ability with Ginnie Mae, but then beyond that, there's also relationships that you need, such as the relationship with a document custodian, your bond custodian that would take in your wires, as well as just your servicer relationship or sub-servicer relationship that can manage Ginnie Mae servicing. I would say those are some large ones. In addition to that, we have the data export. This process is rather data driven, and so in order to, you need to understand your LOS and what your export functionalities are within your LOS. There's going to be, of course, the data that you need to deliver to Ginnie Mae, And whether you have an export built into your LOS, or you may need to build a custom export depending on your LOS to export all that data needed for Ginnie Mae. So in some cases, it's a very simple process to find all that data. In other cases, you're doing some mining and some searching within your LOS to make sure that you capture all the data needed and that you can export that data for the purpose of creating Ginnie Mae securities.
Anybody else have any thoughts on
No,
barriers?
I think the other thing that you want to know as a new issuer, you should leverage, your account executive at Ginnie Mae with any questions or anything like that. They'll be glad to help you, and they can actually maybe put you in a direction or put you in contact with somebody else that may be able to answer some of the questions that you're looking at. So don't be afraid to leverage it. It's a great source, especially if you're starting. Lakeview wasn't around a couple of years ago. We do have a lot of experience, but we definitely did reach out to our account executive and we leveraged, the knowledge that they have. You're not the first one who's going through this.
Right. The account executive should always be there for you. Actually, for new issuers now, we have an onboarding ambassador for brand new issuers, who is Richard Washington, who we'll introduce later. But also, once you've been established, you will have a regular account executive, and also we have the help desk at BNY Mellon that can also help you on some of the technical issues. All right. So Jason, you were mentioning too, establishing some of these relationships. One of them is document custodian. If people have been just delivering whole loans to Fannie, they didn't have to worry about this, but now they have to establish these new relationships. Anybody on the panel, what are some things you would look for in a document custodian to get set up, and what are some of the skills that they'll bring to the table?
Yeah, one of the things, when you're selecting a document custodian, I would suggest that you interview several document custodians. You definitely want to make sure that they have a good relationship also with your warehouse lender. And I know you can speak to that, but that's an important part of it. And you want to interview several of them to know who can help you, what kind of experience. Most importantly, how you can grow your business, right? Because you're going to be starting it off and you hope to grow your business and the ability for them to handle the growth from your business.
Well, as Julio said, you want to make sure your warehouse bank is familiar with securitization, familiar with how a custodian functions, because first and foremost, that's how the loan's going to get funded at the closing table. Then the control of the note after that has got to make sure that it timely gets to the custodian so that deadlines on the securities are met. So you want to make sure your warehouse bank understands securitization and what happens to that note and the process that it goes through, and will allow those loans to be funded on the loan. There are some, I understand, that will not allow securitizations on their facilities, and I think that's primarily just a lack of understanding.
So you're saying some warehouse lenders would not?
I have been told that, yes.
Okay.
I would also say a document custodian that not only does their part in the certification of your pools, but that in the case where you do have consistent issues with your certifications up front, that is willing and able to help you through those custodial issues and point you to where you might have an inefficiency that you can improve and therefore eliminate any custodial issues at time of certification.
Do you want to explain real quickly the difference between the certification for Ginnie Mae and kind of the GSE process?
Yeah, like I tell you, for Ginnie Mae, it's a little bit, you have at the time that you're going to issue the initial security, there's an initial certification, and then you're going to have, within 12 months, you actually have to get the final certification. And so there's a process, there's documents, obviously, as they get recorded, the title policies and everything like that. So you have a time period. In the GSEs, not an area that I focus a lot in, but it's a little bit simpler.
It's the certification all
Yeah,
occurs
your
prior
certification-
to issuance.
It's all
prior
up
to
front.
issuance, right?
This is a
Issuance
lot
and-
more interaction with a custodian than it would be
Correct.
with the GSE.
You don't get that 12 months for final cert.
Right,
Essentially, you're having your final cert right up front before the securities are issued.
Now, Jason, you were mentioning the importance of data, and everything's driven by data these days. What are some of the common data issues you've encountered in kind of the Ginnie Mae pooling process?
Sure. Well, I mean, we see hundreds, if not thousands, of loans a month, and some common data issues that we see are inaccurate or incomplete FHA case numbers. We see MERS min numbers that for some reason are not complete. What we do is we run an algorithm that checks the MERS min, and oftentimes we have MERS mins that are not accurate. Upfront MIP and annual MIP are also two fields that we see consistently that are either missed. And then I'd say lastly would be the loan amount. So we may be provided the original balance, but not the total balance, including any upfront fees. That's also a common one.
Well, and also one thing we haven't mentioned when you're setting this up, you ought to make sure that you have a very good sub-servicer that's going to work with you. And there are a number of firms that do that, some larger, some smaller.
Yeah, we'll get into that
Okay.
in a little more detail here. Absolutely, servicing's key. Well, data first, so good data in, and then we'll work our way down the chain here through that. So in terms of delivering the pools, now what kind of considerations, are there any restrictions in terms of the percentage of FHA, VA, or USDA loans in the pools when you're looking to create the pool?
There aren't any. You can have whatever mix of FHA, VA, USDA within a pool. And you can also have pools that, from a size standpoint, when you're doing a Ginnie Mae 2 multi-issuer pool, you can have pools, small pools as well. I mean, pools down to one loan, $25,000. So
that gives you a lot of
you have a
flexibility.
lot of
if you don't have a
flexibility,
lot of
especially if you're
production.
just starting out. You have smaller
You
production.
don't feel like you have to accumulate
Right.
a lot. You can just deliver one loan a month.
And a lot of issuers want to start out walking before they run, and so that's a great opportunity to take advantage of those low thresholds or low minimums to do a 5-loan pool as opposed to something larger.
How about high balance loans?
There are high balance restrictions. Your standard Ginnie Mae 2s will have a 10% tolerance of high balance within a pool. I don't know if you want to speak beyond that. I don't think I might miss anything beyond that.
Well, that will come in the next section of
Okay.
best execution, a little more detail. So generally, this was just a high-level overview for everybody on what you need to do to get started, but would love to hear from the audience if they have any questions at this point. So if you have sent any questions through email to Anna Roca, Anna, would you have any questions at this point we should address?
Hi, I don't have any questions yet, but I will let you know when we're putting up the email address. It's on the screen right now. So if you guys want to email me any questions that you have for the speakers, I'm here. I'm ready for you.
Okay, great. So here we've talked a little bit about getting started, and then once you've started doing some pools, you want to try and figure out how to maximize your proceeds from the pooling process. So I want to discuss a little bit now some best execution options. For the panelists, what are the financial benefits of delivering to Ginnie Mae versus selling whole loans released?
Yeah, Roy, there's actually several financial benefits in delivering these mortgage-backed securities. The first is just TBA pickups. And what I mean by that is frequently broker-dealers will pay above the TBA screen pricing that you see. So TBA pickups is a big one. The second...
So what will they pay up for? Can you give us some examples?
In general, they'll pay up. It's really all market dependent, but a lot of the most common one is just higher coupons that they'll pay up for. So
And why would they pay up for those?
They'll pay up for them just because of the higher rates, the higher yields, the higher bond rates. So that's more money in their pocket. So they'll pay up for those. And then we touched on it earlier, but your jumbo maximization. You can actually lump jumbo pools into Ginnie 2 multis or into custom pools. And doing so, you don't get hit like you would in a private investor for selling a jumbo loan. And then lastly, custom pools. Custom pools are loans where broker-dealers believe that they have slower prepayment speeds, so they'll pay up even higher for for these custom pools. Examples of that would be high coupons, low balances, things like that.
So how much, what would be the difference in what they would pay out from a regular TBA from a custom pool for, say, a small balance?
I've seen up to 2 full points, and in some cases even higher.
Okay, so it would behoove them to
Yeah.
kind of aggregate their low balance or high balance to create a custom pool instead of blending it in with all the other ones to be able to get the pickup for the
Exactly.
custom pools.
I suppose in the case where they can aggregate and have that kind of production, right?
Right.
Mm-hmm. Mm-hmm. Great. Any, so of the various pooling options, you know, what do you see the benefits between the, like you said, the multi-pool, the custom, the MGM?
Right, so we just touched on the Ginnie 2 multi-pools. We were talking about restrictions. You can do just a single pool and a Ginnie 2 multi. And what I wanted to touch on is that the Ginnie 2 multis, even if you do have the single loan pool, it's the most liquid securitization type within the market. So if you did want to get your feet wet starting out the process, you are selling into the most liquid environment in Ginnie 2 securities. One of the reasons why they're paying up so high for it is since it is a multi-issuer pool, what that means is every issuer in the industry's pools get lumped into a big kind of industry pool. So the prepayment risk is more of an industry standard prepayment risk. It's not a single issuer prepayment risk. So
The geographic
the
dispersion.
geographic,
from
exactly. So everybody gets lumped into one pool. Then the high
Whereas,
balance.
say, a California-only pool could prepay much faster.
Exactly. California is single issuer specific. You have a shop that's specific to California. Exactly.
Single issuer who refis like crazy
Yep.
could pay
Yep.
fast. Mhm.
So that leads into custom pools where it is just a single issuer risk of prepayment. But for things that we just spoke about, like custom pools, you could get higher payups if you were to choose loans that the broker-dealer thought would have slower prepayment speeds. And then finally, the high balance loan pools, the MJMs. These pools have to have loans with a loan balance greater than $417,000. Those are the various pooling options.
Okay, great. So in terms, one thing we haven't got into yet then is in terms of best execution, how do you value the servicing part of the MSR? The MSR in terms of holding the MSR or trading it. Is that, how does that fit into the execution decision?
Right. So MSRs is obviously lender specific. MSRs come into play for the simple fact that I guess how we evaluate MSRs is very dependent upon any pickups we might get, any non-quantifiable benefits we might get for selling the loan, service retained. There's a lot that goes into valuing MSRs when it comes to selling retained or released.
Lenders also have to look when they're retaining it, they've got to look at the cash flow of their company, because when you're selling loans, you're getting that servicing 1 or 1.5, whatever that is, immediately, where you make more retaining the servicing long term, but you can adversely impact your cash flows and your liquidity by retaining all of it all at once. You know, 2 or 3 people have mentioned, I think it is a very good idea to slowly sell some of it, start slowly building your portfolio till you build the portfolio up enough that the cash flow impact is not quite as severe it is as if you just start selling or retaining 100% of it right out of the gate.
That's right. But now, one thing for everybody to remember, at Ginnie Mae, when you're a newly approved issuer, we expect you to retain the servicing until your first compliance review. So in other words, we want you to be a demonstrated participant in the program. We want you repped to us during the approval process that you were willing and able to be a servicer or have a sub-servicer and oversee them. So we want you to demonstrate for a 6 to 9 month period that you can successfully manage the servicing before you start selling it off.
Well, and let me clarify what I was saying, Roy, is that And I understand that and agree with that. What I'm talking about, if you're whatever you're originating, you don't have to pool all of
Right.
those immediately.
Yeah, right.
Split that some, pool
Sure.
some. Now that servicing you should retain. But again, not to impact real adversely the
Great.
cash flows and the liquidity, you ought to designate some of that to continue to sell
Yeah.
till you understand what the impact financially is of retaining it.
Great.
So,
great
but
point.
once you put it in a pool, then absolutely you should retain that servicing.
So there was some kind of misconception. Some people have just been approved and want to do our co-issue program in the first month, and we want them first to demonstrate that they can successfully manage the servicing themselves before they transfer the servicing immediately. Because in our eyes, we have very limited resources at Ginnie Mae, so we want to make sure that an issuer is committed to be a full-fledged member of the program and not really just transferring servicing kind of like a correspondent at issuance all the time. Okay. So then, just for the panel two, what are some of the difficult to quantify benefits of selling to Ginnie Mae versus selling whole loans?
Yeah, there are actually several non-quantifiable benefits in selling Ginnie. For one, broader guidelines. Ginnie Mae's guidelines tend to be more flexible. Two, your turn times.
So in what way are Ginnie guidelines more flexible?
So much in the sense just that you don't have these overlays to deal with as you would with private investors. So I'd say in that sense. And then turn times, I think, is another big one, to where you don't need to wait on the buyer to purchase your loans. You can sell your loans at any time that you want. So that also flows into your warehouse capacity. So you can actually manage your warehouse lines more efficiently by selling these securities. And then
Can you give an example, say, on a monthly timeline?
so you can actually settle loans on any day of the month, but there's a period for typically the first 3 weeks that you can get a loan certified. So really, any day of the month, you can get a loan settled, and dependent upon what processes you have in place, you can get loans flipped in just a few days.
Well, and compare that then to private investors who, for example, in January and February of this year, when you had this huge refinance boom,
Right.
dwell times went out to almost 30 days, which created a huge impact for lenders in warehouse capacity because the loans just weren't rolling off the facilities as quickly as you could if you were securitizing.
It's a great point.
Then my last point that I want to make for this one is kind of the lender for life concept. If you sold a loan service released at the time of origination, you then hand it off to somebody else to establish a potentially year's worth of relationship with that lender that you sold it to. Retaining that customer keeps you in focus for that customer. So if rates dip like they have done, then you could be the first person they reach out to refinance. If they want to sell their home, buy a new home, you could be the first person that they call to get the new loan. Or if they don't do either of those two, then they just stay in your servicing portfolio and you get the servicing income.
Yeah, great point. Great point. And you would lose all that
If you sold it
sold
released,
service.
exactly. Yep.
So if you spend a lot of time cultivating the relationship with the customer, you want to keep it when you
It pays
through your
dividends
service.
down the road.
Great.
Yep.
So we mentioned a little bit. Some people further on down the line may want to do our co-issue program, which we call the PIT program, for transferring their servicing at issuance. What are some of the operational and execution issues related to that?
Right. So first, what you just said, you have to be a seasoned issuer. Another thing that people applying for PIT might not realize is that for every co-issue relationship that you want to establish, you have to have a separate approval. One approval, if you get approval for a co-issue, that is specific for that co-issue partner. You have to get another approval if you want a relationship with another co-issue partner. A couple things that you should be aware of is the sub-servicing aspect. Is we always liked to have them co-issue with us as the sub-servicer or with them as the sub-servicer, just so you don't have that interim servicing period where it gets a little muddy. And there has to be some highly coordinated efforts, because once the pools are submitted for transfer, you have 24 hours, the buyer does, to then approve those pools.
Very
So
tight timeline.
it's a very tight timeline, so you have to be highly coordinated.
And how about on the custodial side there too?
Yeah, you know, that's the other thing is, right, if you have a different custodian that you're pitting it to, right, then there's the transfer of collateral that needs
Yep.
to take place. Another thing that's extremely important, you need to understand that in the PIT process, the movement of the escrows within the 48 hours is extremely, extremely important. And yeah, no doubt, a PIT transfer from same servicer to same service is much subservicer to subservicer is much easier, right? There's not the movement of the customer and everything. But I think the other thing that you need to be extremely careful with is not that you don't violate the RESPA requirements, right? Because you know, you have to get out the notice when there's going to be a payment change for the new servicing agent. So I think you got to watch out for RESPA. I think definitely watch out for the escrows. That's extremely important. And you know, when you're doing different sub-servicers, you got to be careful because there's a lot of mechanics that go into it, the boarding and everything like that you have to watch out for.
Great. So I think that was a great little summary on some of the execution issues that you have to deal with, and hopefully some tips on how to improve your execution through, say, custom pools and those kind of things, and also some of your options further on down the line in servicing transfers and that type of thing. Just want to check in then with the audience to see if we've gotten any questions from the audience that we could address in terms of best execution in emailing your questions to the address on the screen. Anna, do we have anything?
We have one question so far, and I do want to urge viewers that if you have any questions, please do email me. The email address is going to come up on your screen shortly. It's ana.c.rocha@hud.gov, and I will get it right here, and our speakers can answer your question for you. The only question I have is if you guys can talk a little bit about repooling modified loans.
Yeah, I could talk about that because we do quite a bit of that. It's pretty much the same process that you have to pool new issues, right? There's some additional data elements, right? You obviously need to provide some of the information with regards to the loan modification. Again, you need to work very carefully with your subservicer. You can make sure you can get the data on a timely basis so that you can try to execute as quickly as possible. Areas that you need to focus on, they may not have all of the origination from the original loan when it was originated. You need to make sure that that data system, you can get access to that data because it's not generally data that sits in the servicing system.
What type of data elements?
Yeah, like first-time home buyer programs, there's, the purchase price may not be in the servicer, in your subservicer or the servicer system. So you need to be careful about that. I think the other thing, one area that's a big challenge is getting the CLTV. Right, because now you have a partial claim where there's a second that's made out to the Secretary of HUD, and you need to report that. So you need to make sure that you calculate the CLTV. That's not something that a lot of subservicers do when they're underwriting the loan or approving it for a loan modification. But it's a very simple process. It's just exactly the same as delivering, new originations. And you can just mix it with any other pools. There's no need to separate it or anything like that. And it's a good way to get cash back. Obviously you're selling it to an investor, putting it back, into security. So it's a great thing. We do it all the time. We deliver somewhere about 50 million a month. So it's something that happens.
50 million of modified loans?
Yeah, modified loans. So it definitely is something that works. It's very easy to do, and it's the same process as you would have in delivering a regular loan.
Yeah, we don't do 50 million. We're somewhere south of that, but yeah, it's the same exact execution process. There is literally nothing different in regards to the execution.
Yeah, mostly data points.
It's data points. Yeah.
And again, I think the other thing that's extremely important is you have to work with your custodian, right, for the certification, right, because you need to get the loan modification documents and everything like that, and that data, so that you have to coordinate the efforts between, your secondary, your custodian, as well as your subservicer.
Great. Any other questions, Anna?
I do have one here about PIT pooling. It's asking how long it takes in order for someone to be able to do PIT pools after their first field review.
So what I was saying, the initial trial period for a newly approved issuer is through their first compliance review. We want them to deliver and successfully service for 6 to 9 months, and then you'll have a compliance review. And as soon as you've completed your first compliance review with no significant findings, then you're eligible to engage in the PIT program. So you would get approved as a PIT seller at that point, and then we also approve the buyers. We look at the buyers in terms of, do they have sufficient capacity and expertise to be able to negotiate this transaction successfully? Do they have a good track record of doing this? Because the timeline is very tight, so we want to make sure that they have that, as well as they have a good servicing track record. So the general approval process is after successfully get through the first compliance review, and then there's a PIT seller and PIT buyer approval process as well. Okay, so we were lucky enough here to have Gary Ort at one of the premier warehouse lending companies, Texas Capital, along. So why don't we get into a little bit, just what are the basic mechanics for a first-time issuer in establishing a warehouse line, in the timing of, in terms of a securitization and paying off the warehouse line, delivery versus payment, that type of thing?
Well, the mechanics of establishing the line are really pretty simple depending on what bank you're working with or approaching. Most of them are going to want 2 years audited financial statements. They're going to want volume for a year or two, and they're going to want a forecast of volume. Going to want investor references and scorecards from those that you've been selling to prior to starting to securitize the products, all the agencies' approvals, so that we know what you're approved for and at what level you're approved for, resumes of the management. And again, that's just to make sure you've got the experience, that you know how to do securities and you know how to hedge them properly and to protect yourself. Credit background generally on the principals of the company. There will be covenants established, and most of the time those covenants are a tangible net worth, liquidity, and a leverage ratio to make sure, again, that the company stays healthy and doesn't overrun its skis a little bit, which sometimes when you first start in there, this is a little bit of a tendency to get a little forward on your skis, get a little ahead of yourself, and that can put you in a world of trouble really quick. As far as delivering, it's not a lot different. You need to make sure, part of the reason I had said that you need to make sure the warehouse bank understands the securitization process is because of the custodian. All those notes have to be delivered to that custodian and certified before you can actually do the security. So your bank has to understand that they are going to be forwarding that note to somebody other than a private investor to certify that note. Then they need to understand how the settlement process takes place and how the funds are going to come back to that warehouse bank. And because you've also got to set it up that the funds have to come to the warehouse bank. There's not a warehouse bank I am aware of that will allow money to go to any lender. That just doesn't happen. It comes back to the warehouse bank, and any profit you've made on that or excess then is given to you, but it has to come back.
It has to flow through.
That's the flow through. It's not difficult to set up. The biggest thing I would tell you is make sure, and reiterate it again, make sure whoever you're working with has an understanding of the mortgage business and of securities. That's just vitally important to do that.
Now, are there any particularities with Ginnie Mae servicing from the warehouse standpoint, or Ginnie Mae pools?
No. Actually, if you're going to the cash window with Fannie Mae, that's pretty cut and dried and simple. You're going to have a custodian, and whether you're doing Fannies or Ginnies, and that's really where the warehouse bank is going to be concerned, is who has my collateral, and when am I going to get paid on it, and when, and what time frame am I going to get paid on it. Well, they're also going to want to know, and we do, what type of pools are you doing, and when are they settling? Because we understand, let's assume that you're a company that only settles once a month, and let's say that's on the 20th of the month. Well, if you close a loan on the 12th of the month or the 15th of the month, the odds are very high you're not going to make that pool on the 20th, so it's going to roll another period. So then the question starts coming, okay, why do I have this loan here at 25, 30, 35 days? What's wrong with it? If you understand the securitization process, that question never gets raised as long as that warehouse bank knows it's in a security. I closed it too close to the settlement date of this one, so I've got to roll it to the next month or whenever they might do it. But it's not a lot of difference between selling to a private investor and doing a security. We do an awful lot of Ginnie securities. I'm going to guess probably 45% of our volume is government product that goes through our warehouse facility. So we know all the custodians. We work with them closely and we understand it. Not all of those are securitized either. Some of them are sold to private investors, but we're a pretty significant player in the securitization world.
And then Ginnie Mae issuers Ginnie Mae issuance is a little bit different than GSE issuance in that when they have delinquent loans at the GSEs, they're bought out of the pools at 4 months. With Ginnie Mae, they can be, but they can be kept in the pools, and that can require some advance financing, which also requires a good relationship with your warehouse lender. Can you explain how the advance financing works?
Well, depending on the bank, again, we at Texas Capital, we will not advance or do advances on a warehouse line because it's a different product, different collateral, different everything on it, because you've got a borrower that for whatever reason hasn't made their payment yet, so you have to advance that to the pool holder or to Ginnie Mae and to the holder of the security because it's their guaranteed principal and interest. Now, you get that money back when the borrower makes his payment, but we will do the financing of that, but only under an MSR facility, not through a warehouse. And I am not aware of any banks that will do advances on a warehouse facility because it's an entirely different type of collateral versus a warehouse. You know, so the MSR financing, we do that, and as Roy can tell you, we do a lot of the Ginnie Mae product. We do have some, you'll find requirements on that are a little stricter than they are on a warehouse line, only because of the additional risk that the warehouse bank or the bank assumes when they do the MSR financing, and you get a lot tighter covenants on it to make sure.
So what would be the advantages of having MSR financing?
It allows you to leverage your asset to make your advances, rather than using your own cash. You can leverage that asset to make those advances or to buy the loan out of the pool if you have to, for foreclosure or whatever. But it allows you to better leverage the asset because, as you build the portfolio, the cash flows on that are probably not going to be sufficient when you first start to cover your advances. But as you grow that portfolio, those numbers start flipping, and if you get your portfolio up high enough, then your cash flows off the servicing rights will give you enough liquidity that you may not need the MSR facility. But to start with, you're going to have the MSR facility, or should have it if you got to make those advances.
Now, are there other requirements that go with MSR financing in terms of escrow or that kind of thing?
Yeah, there are, as I said, there are higher tangible net worth requirements, a little stricter covenants, and we at Texas Capital, we want the escrows on anything that we do the MSR financing on, and the primary reason for that is that if there is a problem and we have to, for whatever reason, take over that servicing, then I don't want to be fighting another bank for those escrows. We want those because, again, when that default occurs, there's generally a lot of underlying issues in there that are problematic for that company. So we want to make sure we have control of the money that belongs to the consumer. And that, in essence, is their money.
Now, they're held in Ginnie Mae custodial accounts titled.
That is correct.
To Ginnie Mae.
They are held in Ginnie Mae custodial accounts, but the lender does not own those. That is the borrower's funds to pay their taxes, insurance, principal, and interest in a trust account for Ginnie Mae.
They're separate trust accounts.
And a
It's
separate
not
trust
commingled
account.
with
Cannot be
anything else.
commingled in any way.
Right.
And it's a separate P&I and versus T&I account as well.
That is
right?
correct.
Yeah, and if you have a 203K, that's even a separate account too.
All that is we
And-
break it down by separately on each one of them to make sure that, it's not unusual to have a servicer that could have multiples of accounts just based on the product they're using, what it is, when the pool was done, because, again, we just want to make sure that if anything, heaven forbid, goes south in that relationship or that company, we have the ability not only to protect Texas Capital, but to protect Ginnie Mae and protect the consumers who are really the ones that are at risk when something like that happens and servicing starts floating around. And we all know the very receptive regulatory environment we live in today. You want to make sure that you're taking care of the consumer and protecting that consumer in every way you possibly can.
So, right, and timely deposits is one of the key ways to do that.
Yes.
Exactly. Exactly. So I think that was a great summary of warehouse lending, and that's a whole different aspect that somebody needs to get in for securitization, particularly with Ginnie Mae securitization. MSR financing is a great tool. So I again just want to check in with the audience here. Do we have any other additional outside questions for our panelists?
Yes, I have one question as of right now. When doing a PIT pool where our document custodian does the initial certification and the pool will be transferred to a second document custodian for servicing, is there a time frame this has to be done in? And will the second custodian do a recertification?
I can answer that question. The reality is when you have that scenario you just mentioned, what would happen is at the servicing transfer, the new custodian gets it. He will do the final certification, not a recertification, right? Because you have 12 months from the initial, the settlement to actually get it final certified. So the new custodian in the scenario you presented would actually be the one that would final certify.
But would it still be within that initial 12 months?
Yes, within the 12 months.
Yeah.
Yes.
It's not another
Yeah.
12 months where it's
No.
really
No,
24.
no additional 12 months. It's the initial 12-month period.
Someone else also wanted to know about pre-certification. Can you talk a little bit about the certification process?
Yeah, the initial certification, well, there's some basic documents that you're going to need to initial certify, right? You're going to need the note. You're going to need, a copy of the security instrument. If it's a loan modification, right, you're going to need a copy of the loan modification as well. And then what happens is, the custodian is going to review those documents, make sure that they were properly executed, that the data matches the data files that they receive and everything like that. They'll give an initial certification. Then within the next 12 months, what ends up generally happening, the documents that we're waiting for are going to be, the final title policy as well as the recorded security instrument. And then once they get that, they'll review that, make sure everything's fine, and then you'll have a final certification.
So you really have to build up this trailing doc process.
Correct.
To make sure they get to the doc custodian in that 12-month period. And that requires, the communication throughout the organization.
Yeah.
The trailing docs could come in through the origination arm, and they need to know how to get it to the proper custodian, and the custodian needs to tie it into a specific pool.
Correct.
So, and it behooves everybody to get the trailing docs in the 12-month period. Otherwise, if issuers have a high percentage of pools that don't get final certified, they have to pledge a letter of credit, and that could get very expensive.
Yeah.
Sorry to interrupt you guys for 1 second. I want to let you know that there's some people having trouble with the buffering for the internet. So if you can hear me, please know that this is being recorded and is going to be available for viewing again in about 2 days.
Okay. Any other questions, Anna?
Not at the moment.
Okay, great. And then another key issue, for a new issuer, what we've seen is a vast majority of the new issuers, and rightfully so, they don't have the critical mass to do the servicing themselves right off the bat, so they engage a sub-servicer. And for us, it's very important to manage that sub-servicer properly. So, you are on the hook for the reporting as the issuer, even though they do the work. But so it's vital that you get a good sub-servicer. So just throw out to the panel, how do you decide which sub-servicer is right for you? Is it the lowest price is the best, or do you get what you pay for? How does that work?
No, generally that shouldn't be your criteria, the lowest price. I think what you have to do is, today we manage 3 sub-servicers. And so there's quite a bit of due diligence. You got to do quite a bit of homework. The one thing that I can tell you in selection of a sub-servicer, the one thing you got to keep in mind is this is a partner, it's not a vendor. Okay, they are your partners. They are an extension of your business. Most importantly, you got to remember this: they're going to be dealing with your customers, right? And down the road, you're going to want to possibly refinance these individuals. And remember, they're going to remember the experience that they had with the subservice. Say, oh, I had a tough time with that person. So I can't tell you how important it is that you don't just consider them a vendor. You have to realize these are partners. Right. There's a lot of factors that go into selection of, you can get recommendations. The other thing is you got to make sure, one, that they have the experience to manage the growth of your business. In addition, can they work with your warehouse lenders? Can they work with your dock custodians? Have they had prior relationships with your dock custodians, with your warehouse lenders? That makes life a lot easier. The other thing is you've got to spend a considerable amount of time during the contract, right? Reviewing everything. A lot of contracts may say, we'll service loans according to applicable requirements. Well, here's where you get into the situation where the lowest bid may not be your best, because you're going to find out that probably the lowest bid is going to have this thing called statement of works. And he's going to say, yeah, well, we do 203Ks, but to, subservice 203Ks for you, there's an additional cost. To do the MERS, there's an additional cost. So I got to tell you, when you're doing your due diligence, you're doing your homework, you really got to find out what is it exactly they're going to do. Spend a considerable amount of time understanding what services they provide, what services they expect you to provide. And then in addition to that, you've got to understand there are some duties that Ginnie Mae does not allow you to let a subservicer do. You can't delegate some responsibilities. Ginnie Mae has some very specific requirements where you must do it, and you can't have a subservicer or an agent do it for you. So
what type of things would they be?
Yeah, like disbursement of funds, that's something that can't be done. And there's quite a number of, if you look at it, it's in the guide, there's about 8 different things that you are not allowed to delegate to a subservicer. It's important that you know that. It's important to know that during the review, the compliance review, because they will check for that. So make sure you do that. But again, low cost is not necessarily the best. You've got to be careful. I think during the agreement, make sure you understand what you signed up for, make sure what they're going to do, and make sure that they can work with some of the other parties that you have. Again, I can't stress the importance. They are a partner. They are not a vendor, and you need to understand that.
Great explanation, Julio. So you explained the importance of the service. How about how do you oversee, as the issuer, what is the characteristics of a good servicer oversight program?
Well, the first thing that I would tell you about servicer oversight, it's not a spectator sport. It's a full-time job. You actually have to be involved in it. And your oversight plan needs to include several areas. Compliance is extremely important. We know the environment that we're in, so compliance is extremely important. You need to spend a lot of time in the compliance and making sure that your customers are being treated right. Another part is performance, especially when loans start getting delinquent, right? You need to understand, how do they do their loss mitigation? What is their contact? What's their right party contact? What are the processes they go through? And you actually have to spend a lot of time, reviewing, the reports. I can tell you, I attend meetings all the time. There's different loans that require different, attention, right? The SICRA loans, you need to be spending time to make sure, when you're going to put them in foreclosure and everything, the protections. I can tell you that, in dealing with a lot of subservicers, there is a lot of times that they will come for you for decisions. So again, it's not a spectator sport. You have to be active. You have to be involved. And so, you performance, measurement is extremely important, and the ability to monitor how they deal with the rest of your stakeholders, how the relationship with Ginnie is, the relationship with the dock custodians, how your relationship with the warehouse lenders. And then finally, the last thing that I can tell you is another area that I spent a considerable amount of time. Ginnie Mae's reporting period is a very short window. You need to make absolutely certain that they hit that reporting every month. And so I can't tell you how important and critical it is. Another area that you have to work on is making sure you know how to manage your advances. We talked a little bit about advances. You got to understand how the advances are done. I can tell you, I can go on for hours and hours. We participate in the 601 program. You need to find out, can they participate in the HUD sales? Again, buyouts, loan modifications, redelivery. These are stuff that you need to find out, can they handle these services? And again, not the low-cost provider. Is that a statement of work? Is that going to cost me additional? And you need to know.
Great, great. And in addition, since we see so many issuers who engage subservicers, we feel that the subservicing oversight position is a vital position. So we're looking to the issuer to hire experienced person in that area. You need to have somebody experienced, particularly experienced in government servicing. Government servicing can be different than GSE servicing. They need to know the loss mitigation waterfalls and all those kind of things. So we're looking for somebody who can oversee government servicing, who has it as a full-time job. You know, it gets scary when it's a part-time job for somebody and you know they spend 3/4 of their time on other things. It can be, to be done properly, it can be labor intensive, but if it's done properly, it can lower your costs. You know, you can make sure that the loss mitigation timeline is run very tightly. You know, what we've seen is people who add additional staff to the subservicing oversight group actually pays for themselves because the servicing performance improves. The more you supervise them, the more you question them, the more likely they'll perform better for you. So it's a vital position within your organization, and the more experienced and capable that person is, the better the servicing performance will be.
I agree.
So since it's so important, do you feel like it would be wise to hire an independent third party to review your subservicer?
Yeah, we actually do it, right? And one of the reasons we pick a third party is you got to remember, as I mentioned earlier, you know, you're looking for a partner. And sometimes as you deal with partners, you become cozy. There's a cozy relationship. And I think that the great thing about having an independent third party come in is they may spot something that you didn't see or anything like that. We do it. It's a great learning experience. It keeps us honest, right? And so I would strongly suggest that, you know, once a year you do have a third party go in there, and there's several vendors that have a very experienced. And they'll also share best practices that they've seen at other shops, and they may tell you, hey, you know, your subservicer is doing, you know, loss mitigation this way, but here's another company that's, you know, is doing it this way. So it's a great way for you to pick up, you know, some additional insight into what others are doing, right, other than your subservicer. You know, we provide it to our warehouse lenders and everything like that. It's great. And I think it just keeps you honest because, again, you're building a partnership. If for many years, if you're dealing with the same parties, you tend to build this relationship where you may not question as thoroughly as you should. And this is one area that can help you prevent that by having a third party who's totally independent go in there and say, hey, you know, this could be improved upon.
Great. Great. So, you know, I think that's a great explanation of, you know, the importance of the subservicer. You are a partner, but, you know, it does require a labor-intensive and vigorous servicing oversight capability. So I just want to take a quick break here and check in with Anna. Do we have any other further questions from the audience that we could address at this time?
Not at this time, but I am reviewing a couple, so ask me again in a minute.
Okay. So to kind of wrap it up here, what I'd like to do now is just have each of the panelists just weigh in a little bit on any final piece of advice you could offer to somebody newly issuing Ginnie Mae pools from your area of expertise. Just a word of wisdom from this esteemed panel that has great years of experience on, you know, a little tip to be a successful Ginnie Mae issuer.
Well, I don't know about the esteemed part, maybe the other three up here, but you know, it's a little bit overwhelming and it's a little bit challenging when you first start doing this, but it's not difficult. I guess I would encourage everybody to be as transparent as you can and communicate. You've got great resources. Involve your warehouse bank. If they understand this business has been around, that's a great resource to. Your subservicer can be a very good help for you, and you need to involve these people and make sure this is a smooth transition. Talk with your custodian. Not only get to talk with them about getting set up with them, but Have them walk you through the process. Again, be transparent and communicate. Walk through the processes with them. And you've got tremendous resources at Ginnie Mae that are available for you with a phone call. You know, their goal is to make this as successful as they can for everybody that's on this call and everybody involved in the Ginnie Mae program. So utilize the resources that are there. I mean, you've got a lot of knowledge and ability and experience available to you. Don't be hesitant not to use that and communicate with people in those organizations.
With those resources, you can pair that with just starting small. I mean,
Yes.
it's one thing for us to talk about all the financial benefits and different things that you can get as far as executions, but there are pooling options where it only requires one loan. Start at one loan. If you want to start at one loan, you can start as small as you want and experience these benefits that we're talking about. And if you retain those loans, experience those non-quantifiable benefits that we're discussing. It's right there.
So you can walk before you run.
Exactly. You can start as small as you want. You just have to start.
And to build off that, I was going to say the same by walking before you run, but I mean, again, as it pertains to the data side, you know, if you don't have that export functionality or you're not sure about how to get that data out of your system, I mean, we don't recommend you do this for a large amount of loans, but you can certainly, you know, hand key a loan into GinnieNet, and just so you understand and have a comfortable feeling with what it is that you need from a data perspective to deliver that one loan or those two loans the first time, you know, while you're trying to build out the export functionality.
That's a good point.
Yeah, you know, help is only a phone call away, I think is the reality. You know, if you've got, you know, I know Wade at Bank of New York Mellon has been very helpful with a lot of people on the Ginnie Mae, GinnieNet. So it really, you know, the thing that I would tell everybody, look, all of us here are doing it. There's no reason you can't do it, right? And you just got to get in the game. And so I agree, you want to start out small so you learn and you feel comfortable. But the first thing is to take the first step. You got to do it.
And really, we at Ginnie Mae are committed to helping new issuers. And part of that, I'd like to introduce our new issuer ambassador, Richard Washington, if you could come on over. What we've tried to do now is for new issuers have a single point of contact. And that's Richard Washington, who has an incredible amount of industry experience. He's been here since the beginning of the Ginnie Mae program. He has excellent communication skills and would love to work closely with you on each step of the process, on the onboarding process, and to become a success. Come on up, Richard.
Oh, no, he's there.
So this is Richard. You've been here, Ginnie Mae, for how long? Have you ever been on TV?
Yes.
Yes?
I've been
Okay.
here since 1978. The producers told me to get down because the camera stops about 2 inches above our guests' heads.
Okay. Do you want to just explain what you do in the onboarding process real quickly?
Well, the first thing we do is speak to the issuer about the most labor-intensive part of the onboarding process, and that's the trip taken by one employee of the company to New York to meet with BNY Mellon and get fingerprinted. And then there's several small steps taken after the fingerprinting process is completed. And we say we have one final onboarding call, but frequently we'll have 10, 15 calls. So we don't want any issuer to be discouraged or hesitant about asking any question at any time. We try to respond to those questions within a few hours of receipt. That's about it.
Okay, so I'm glad you got to meet Richard. And again, Ginnie Mae is dedicated to trying to provide you, with the tools to be successful. Let us know if we covered the appropriate ground here. If there are other areas that you would like us to address in the future, give us some suggestions. We're actually going to do a similar panel like this at the upcoming Ginnie Mae Summit, which I can tell you there's a save the date coming up in September 21st to 22nd It will be in the Hyatt Crystal City, same location as last year. We have a robust agenda and a lot more space this year, and we're even buying lunch this time. So we encourage everybody to try and attend that. It can be very successful. But let us know if there are issues that you would like us to address and additional areas we could provide training. That would like to wrap it up here. And Anna, do you have any other additional questions we need to address before we close things out?
I'd have a suggestion here. Well, it's kind of a question, but they're just asking about subservicing oversight, which we did speak about a little bit today. And I want to let this viewer know that we're going to be having a course on this at the summit, so hopefully they can attend that. And thank you so much for all the speakers and the viewers.
Okay, well, on behalf of the panelists as well, would really thank you for attending, and feel free to give us your suggestions on any ways we could improve on this and any other topics you feel like we should address. Thanks very much.